Good morning, I'm Clinton Griffiths. Some parts of the country are now drier than it was during the Dust Bowl. And the latest drought monitor shows conditions continue to expand. 77% of the contiguous United States is now in some level of drought or dryness. The last time it was that high was September of 2012. The drought monitor showing conditions continuing to worsen. More than half of the country now in some level of drought. Now, some of that expansion happening in the Midwest, Mid-South, and South, impacting water levels in many of the major rivers. The eastern seaboard seeing some improvement following Hurricane Ian. But take a look at this from the Oklahoma Mesonet. It's looking at the departure from normal for rainfall between June 11th and October 5th. That's now the driest June to October stretch in at least 100 years and drier than the Dust Bowl, with some areas a foot behind normal for precipitation. That has cattle and livestock operators worried about the future as they sort fall numbers. AgDay's Michelle Rook joins us with the latest on the situation in the Southern Plains.
Clinton, a prolonged drought in the Southern Plains has continued to mean deeper culling and liquidation of the cattle herd. That's having an impact on the fall cattle run, and market experts say it should mean some stronger cattle prices once we get through the extra near-term tonnage on the market. With the deepening drought in the Southern Plains, cattle producers have continued to liquidate the herd due to the lack of feed and water, which will mean a smaller fall run.
I just looked at some numbers back from the 1st of April to current. We're running about 9.5% cow liquidation above a year ago.
The volume of feeder cattle through Oklahoma auctions since July 1 is up about 20% nearly. And the proportion of those that are over 600 pounds is way below normal.
So that means less supply. However, with relatively little prospect for wheat pastures this fall, the demand for stocker cattle is also down, with the exception of heavier weight feeders, which are generally more sought after by feedlots this time of year. So Peel says that should support cattle prices going into the fourth quarter.
The bottom line is numbers are getting tighter. We're expecting, all of these feeder supplies generally to start really showing some tightness. And so I think there's a fair chance before the fourth quarter is over that we'll see perhaps the highest prices of the year happen right at the end of the year.
Schultz says one of the caveats is cattle slaughter needs to come down from the current 126,000 to 128,000 head daily.
But maybe I'm just getting a little bit too antsy on that, but I was hoping that we would already be into that mode of getting down, say 125,000 head of cattle on a daily basis is what you want to start seeing.
Even then, he's not sure live cattle futures will take out the contract highs set September 20th.
And I just want to be a little bit more cautious. So I'm still looking for something maybe $2.5 higher from where we're currently trading, which I think maybe I'm going to start having to look at some type of protection.
The other factor he's watching is beef demand if recessionary fears continue, which could offset lower supply in the fourth quarter. Funds have liquidated some of their long positions since the contract highs were set in live cattle in September. However, those chart areas were 156.19 on the Feb contract, 159.65 on the April, and 155.78 basis the June. So those are the areas that we'll be watching.